Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADMISI Services International Limited. Here is your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. Okay, another really interesting piece of action on Friday. It was a bullish white soldier, a second bullish white soldier that is, but more importantly it was the market making a foray higher still into the important overhead heavy duty resistance between 115.70 and 120 even. Now this has highs from 2012, 2013, 2014 and 2017, plus the recent 50% Fibonacci line at 118 even. Prices rose as far as just short of the May 2012 high at 120 even, but pulled back to settle just over the 2017 high at 119.19. Overall, the market continues to move away from what appear to be two descending triangle patterns formed since March. For the moment, with this fresh and seemingly concentrated move higher, I have chosen to set aside the recent idea of a possible rectangle pattern. Okay, so previously I'd started to look at potential targets on the upside for these recent descending triangles that we've seen in this market, as well as the double and stroke triple bottoms from the same period. Now, given the move upwards that we've seen, so for the larger March to April descending triangle, I have a potential primary target X1 in the 132.10 area, for harder secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I have a potential primary target X3 in the 120.5 area, with a harder secondary target X4 in the 129.20 area. For the double stroke triple bottom pattern, I have a potential target X5 in the 126.5 area. Okay, I hope you've all got that. We'll see now if they bear fruit. But so far today, an interesting continuation higher. They're reaching up to the May high and reaching target X3 before pulling back down, though I am beginning to suspect that there may still be more on the upside here. The next significant topside resistance is the March high at 123.74, just over the lesser Fibonacci line at 122.99, and under the April 2012 high at 125.96, which is just target X5. I think the most interesting thing today is that we've actually already reached target X3. Spot gold. A second indecisive spinning top on Friday, though this was not a hammer pattern, such as the previous one indicated. This one has turned out to be more like a small bullish double pattern. Interestingly, though, the last two sessions were both indecisive patterns, they could also be looked at as small bullish patterns. Anyway, this is the fourth close outside the broken upper time, currently at 18.26, the early March to late April bearish Andrews pitchfork. I think I may retire this pitchfork after this commentary unless I see anything special today. Below, we still have the long moving average, currently at 18.41, where last week the market found some pretty good support. Meanwhile, above, we still have the 50% Fibonacci line of the March 21 to March 22 move at 18.73. This resistance has been approached last week, but the market has balked at properly testing it. So far today, a slightly higher open and a fresh attempt higher, but not as yet reaching the overhead 50% Fibonacci line. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADMISI Services International Limited. And here comes the final bit.